What is going on? Welcome back to Financial Journey. So today I got Jason Barnard with me, who is the president and CEO of Foremost Lithium. Ticker is FAT on the Canadian exchange, FMST under the NASDAQ. Jason, I appreciate you taking the time to spend some time with me and go through some of what the company's all about.
Thanks for having me, Cal. Happy to be here.
Okay, so getting right to it, for those of you that don't know about what Foremost does, could you just break it down what Foremost Lithium does in general and just some of the recent events, I guess?
Yeah. So Foremost Lithium is a hard rock lithium exploration and mining company situated in Manitoba, Canada, specifically Snow Lake, Manitoba. We have four large lithium properties. Well, they're called the Lithium Lane properties, and one of them has a resource on it. We have proven up that our lithium is amenable to 6% battery grade lithium on our 𝗖𝗎 property. And we'll be going back to our 𝗖𝗎 property if you want to read our news releases to prove up more reserves on that one of our four properties. Also, we've proved up lithium and lithium dikes on our Jean Lake property, where we'll be going back soon to drill off more lithium. And interestingly enough, we also have a gold discovery where we hit 7.5 grams per ton gold over 7.5 meters. So that is a real interesting situation. A lot of interested parties as we have both gold discovery and lithium discovery on that Jean Lake property. But hard rock lithium, in on trend with the revolution in green energy, and what we benefit from here in North America is that Biden Inflation Reduction Act, which will give green credits and a $7,500 tax credit to electric vehicles that are purchased. And now, interestingly enough, you get it on the front end. You used to have to apply and get the money back from your taxes. As of Jan 1st, you can get that $7,500 credit for your electric vehicle upfront, but it has to have 80% of its supply from North America or free trade partners. So there's a catch there. It's very good for hard rock lithium in Canada and any lithium projects in North America. So being on the NASDAQ, symbol FMST, there's not much choice for lithium companies on the NASDAQ, and we'd like your investors and your people to take a look at us there.
Of course. And so just generally speaking, what sets you apart from other like lithium exploration or mining companies?
What sets us apart is we are situated there in Manitoba near one of the only two hard rock lithium concentrate mines in North America. So what does this mean? When you're near a hard rock lithium mine, concentrate mine, you can send your ore through the direct shipping ore strategy and get a revenue stream going. So this is one of the plans that Foremost Lithium has to mine, crush, and ship ore to what's called the Tanco mine. Any of your viewers can look up Tanco, T-A-N-C-O, and see that we're near a mine in Manitoba. The only other one is Piedmont Lithium owns 25% of the other hard rock lithium mine in Quebec, which has a lot of deposits around there. Manitoba, we are near one. So that sets us apart from everyone else because we actually have a revenue stream that we can create through the direct shipping ore strategy. Also, hard rock lithium, there's not a lot of it going on in North America. There's one brine mining situation in Nevada, but there's not a lot of them going on. So that's, usually you would have to go around the globe to get them. So that separates us also.
Okay, good to know. You did briefly talk on EVs, and especially with the whole EV market being very heavily reliant on lithium. And based on a lot of the data that's been coming out, a lot of the EVs just have been slowing down on sales and whatever else. What's your response to that?
Well, I do think that there's been a reduction in sales of the luxury lithium vehicles, the higher end, $80,000 to $100,000. The Lower end vehicles, I think, have been selling quite well. I also think a lot of the sales will kick in now that, especially in North America, now that the $7,500 tax credit you can get on the front end. So you can walk into a dealership and get that money as a down payment for your car, something you couldn't do before. So I think we're going to see sort of a comeback in sales of lithium. Lithium itself as a commodity has had a pretty mean correction, probably 60–70%. So valuations are low in lithium stocks and some EV companies as well. But I feel that the supply demand situation, even to normalize, would bring the lithium commodity up quite a bit. It's a little oversold, a little overdone. There was stockpiling in China with the supply chain issues that happened after COVID, and it's just working itself through the system right now. The supply, the demand will carry on, as we know. EV sales are going to carry on and actually increase. So there's always going to be demand for lithium. Valuations are low, and I feel that lithium sales will tick up here, not down, like they are in Europe.
Yeah, of course. So that actually kind of touched on my next question a little bit, especially with lithium prices going down as much as they did. And obviously, you said it's kind of going through the system essentially. Do you see them rebounding, the prices of lithium in the short term, and how does that impact your company?
Well, first I'll talk about my company because the valuations have been low. So there have been backup in share prices with FMST, our stock on the Nasdaq. Just over 2 weeks ago, on December 15th, the stock was 410, and we were doing some volume, coming out with great news, and the tax loss selling kicked in. So why does the tax loss selling has brought the valuation even lower? I think as people come back after 30 days of selling a stock tax loss, they tend to go buy it. So this creates a great opportunity. And I'm not an investment advisor, but I do think it's a great opportunity to buy FMST. I am biased. And the commodity itself, that has lent itself to the lower valuations and hence the tax loss selling that we got at the end of the year. So we were 410 on the December 15th. We're 250 right now, and I feel we're leveling off. So created some low valuations itself. The lithium hydroxide or carbonate price all the way down under 20,000, very much overdone. Lithium normalizes as the supply works itself out. Remember, in mining, what happens is when you have a high commodity like over 70,000, like it was a couple of years ago after a huge run, then you've got a buildup of supply as mines come on stream. With the commodity price coming down 60–70%, a lot of those mines are shut down, and the supply constrains itself, which allows that supply to work itself out of existence, and all of a sudden demand, like the normalization alone, let alone if there's a huge demand for lithium, should create possibly the next big commodity run of 2024. And I feel you'll start to see that as 2024 unfolds, a nice run in the commodity price of lithium.
Love the explanation. So you briefly did talk on lithium lane. Could you just tell us what that is and just what stage is currently at?
So the lithium lane properties, we have both a discovery and a proving up of reserve situation going on. The interesting thing about Manitoba is it's a very mining friendly area. So Snow Lake, Manitoba, that's the town north of Winnipeg. It is known for Hudbay, an almost $3 billion company that produces gold and base metals. We've got Kinross in the area, lots of gold and base metals companies, over 100 years of mining in the area. So very mining friendly. So this allows for us to go in and feel very confident about proving up a lithium reserve, which we'll do at Zoro. We're going in, you'll see in our news releases if you read them, we're heading there for a $7,500 meter drill program to prove up more reserves. And then on our other properties, for instance, Sheen Lake, there's a 2,500 meter program set up. You'll see that in the news releases, where we're going to go and find more discoveries. So we're going to find the source of the B1, B2 dike, where we found lithium before, and I mentioned the gold discovery. So it's all about proving up reserves. A good way to play the lithium commodity: you own reserves in the ground. You don't have to pay to store them, stockpile them. And so the lithium commodity, as it moves back up, and that's my biased view, that I'm positive on the lithium commodity. You go in and you prove up reserves there in a mining friendly area like Snow Lake, Manitoba, which is at the tip of the NAFTA superhighway. It's right up central, and can supply all the electric vehicle companies and the battery makers that are coming into North America with their lithium. And what's really interesting is, with the Inflation Reduction Act and all the green credits and all the investment that's going in to create electric batteries and supply products for electric vehicles, you're going to see a lot of vehicle manufacturers and battery manufacturers try to secure their supply in North America in the ground. So you see offtake agreements where electric vehicle manufacturer would come and purchase lithium for future delivery, 2025, 2026, but they'll buy it at today's price in the ground. Very good non-dilutive cash for the company. So you'll see a lot of sort of transactions between electric vehicle manufacturers and electric battery makers. So that's where I think it's heading here in North America, and very positive outlook for growth.
Actually, I do have a sub question to that, actually. Since you mentioned that a lot of maybe companies are looking for future orders, so they kind of set in current prices, do you think that's advantageous to do, given that maybe potentially the lithium prices might be appreciating in future time? Or what percentage are you personally, I guess, hedging for the future?
Well, it's very, very great way to grow if you're a lithium exploration or lithium mining company, to receive dollars now, non-dilutive to your shareholders. So this is capital. They put millions of dollars in. You can prove off more reserves and have the money to mine the stuff and deliver it to them in the future. So it's sort of self-manifesting. That capital comes in non-dilutive. You don't have to raise it in the market. So it's hard to beat when an electric vehicle manufacturer or battery manufacturer wants to inject capital non-dilutive. So you don't look away. You take that capital because it's very good for your shareholders and shareholder value.
Of course. And without mentioning any names, have you come across a lot of interest, despite the slowing down in some areas that I mentioned?
Yes, there's always interest, and that's because the electric vehicle manufacturers and battery makers, they see beyond the next year or beyond the next 2 years, and they see demand into 2030 that far outstrips supply. So they have to, in their 5-year, 10-year plans, they have to know, what price they can receive the commodity at. So they're happy to go and sort of buy that lithium in the ground now.
Okay. And speaking on 5 to 10 years, kind of outwards thinking, where do you see foremost in that 5 to 10 year plan?
Well, I see, as you grow and grow your reserves and you find more discoveries, there is a lot of interest. And first of all, there's a lot of share price appreciation. There's a lot of shareholder value created. But you do get to a situation where, if a mine that's in the area may just come out and take you over, or a battery manufacturer may look towards moving into a place like Winnipeg, and they'll say, well, we'll go ahead and buy up this company. Because so I see, with the growth in lithium and the growth in lithium commodity, that these companies are takeovers. But if not, we'd be happy to get the kind of revenues that come with producing the lithium for lithium concentrate production. So yeah, it's just a growth scenario. If we're going to be mining it, we're happy to mine it. It's great revenue. There's good margins in the commodity. If not, someone will come along and buy the lithium in the ground like mining companies do. So we've heard we know that the oil and gas companies are thinking about getting into the lithium space. We know that many other mining companies that are maybe in commodities like that aren't quite as profitable, don't have margins, will be looking into the lithium space. So we think the future is bright so far as getting taken out and growing shareholder value for our shareholders.
Well said. And could you just outline, just in general, what investors could potentially expect from Foremost in the coming months?
In the coming months, you will see that we're going in to start drilling on Zorro to prove up more reserves. Zorro is open at depth and along strike. When we got our reserve, we only drilled down to a certain point before we did our SK 1300. In Canada, they call it a 43101, so that we could get our reserve up and running. We'll go back there. We haven't been back there for a while, so we'll drill deeper and we'll go for more tonnage. And then, of course, the concurrent or just after it, we're still yet to decide, drill program at Jean Lake, where you will see, brand new discoveries if we hit them. And of course, those two drill programs, should be a quite exciting time for the company and the company's growth.
Of
That's what you
course.
should
And
see.
yeah, and I guess in turn that'll should in my opinion at least incentivize more investors to get in, as I believe you have a relatively low float. Are you aware of what the float currently is?
Yeah, the float's very small. It's just over a million shares. The outstanding share, it's a very tightly capitalized company with only 4.8 million shares outstanding. So very tight capital structure. And I'll just point out that you may see something also. We're a very asset-rich company. We have a gold silver previous mining situation in New Mexico. It's called Winston Gold Silver. We plan to monetize that going forward. That company or that asset, the company IPO'd on years ago. It's been worth upwards of $15 million before. We're getting no value in it. So we would like to monetize. I'd be remiss to not mention our gold silver previous mining situation in New Mexico. So you may see things going forward on that as we monetize that. And yeah, tight share structure. If we were to get moving here, I feel that it doesn't take a lot of buying to move a stock with or show share price appreciation with only 4.8 million shares outstanding.
Yeah, exactly. I've been watching your stock for a while, and you're right. It doesn't take much to move it up. That's definitely good. But we have touched on quite a few things. I appreciate that you taking the time to go through this, Jason.
Yeah.
Is there anything else that you'd like to add?
No, just I'm happy to talk to you anytime, Cal, and I'm happy to talk to any investors. I don't know if you'll put up my email or my contact information, but I'm happy to talk further with yourself or anybody that wants to look at the company for possible investment.
Of course. Yeah, I'll throw up your information, and as well, for anyone interested, I'll put in the description below a link to their website. Has a lot of information, so highly suggest popping over there and take a look at that. But Jason, once again, I appreciate you taking the time to kind of go over a lot of what Foremost is all about.
Thanks for having me, Cal. Good talking to you.